Hello and welcome back to Make Money Guide. Why invest? Investing can provide you with another source of income, help fund your retirement, or even get you out of a financial jam in the future. Above all, investing helps you grow your wealth, allowing your financial goals to be met and increasing your purchasing power over time. Today, we are going to be talking about the top 5 investments of all time. Make sure you subscribe to the channel and turn notices on so you don't miss any valuable content. Number 5. Alternative investments. An alternative investment is a financial asset that does not fall into one of the conventional investment categories. Conventional categories include stocks, bonds, and cash. Most alternate investment assets are held by institutional investors or accredited high net worth individuals because of their complex nature, lack of regulation, and degree of risk. Alternative investments include private equity or venture capital, hedge funds, managed futures, art and antiques, commodities, and derivative contracts. Real estate is often classified as an alternative investment. Many alternative investments have high minimum investments and fee structures, especially when compared to mutual funds and exchange-traded funds. These investments also have less opportunity to publish verifiable performance data and advertise to potential investors. Although alternative assets may have high initial minimums and upfront investment fees, transaction costs are typically lower than those of conventional assets due to lower levels of turnover. Most alternative assets are fairly illiquid, especially compared to their conventional counterparts. For example, investors are likely to find considerably more difficult to sell an 80-year-old bottle of wine compared to 1,000 shares of Apple due to a limited number of buyers. Investors may have difficulty even valuing alternative investments since the assets and transactions involving them are often rare. For example, a seller of a 1933 St. Gaudens Double Eagle $20 gold coin may have difficulty determining its value as there are only 13 known to exist as of 2018. Compared to the traditional investments, alternative ones are illiquid. This means that they cannot be converted to cash easily. They also have a low correlation of returns compared to those of traditional investments. This means that the market performance of traditional investments and alternative investments are independent of each other. Therefore, the inclusion of alternative investments in a portfolio can reduce its risk. Alternative investments face fewer regulations and have less transparency than traditional ones. They have limited data, which is not publicly available, and also have unique legal and tax considerations. The most pervasive alternative investments today are private equity and real estate. However, there are other more specialized types which also offer considerable returns. They include hedge funds, commodities, and infrastructure. Why invest in alternative investments? For one, they can help to diversify an investor's portfolio, and since they have a low correlation with traditional investments, they help an investor to reduce risk. Alternative investments have also historically outperformed traditional investments, so they can offer superior returns compared to traditional options. Alternative investments also have the advantage of providing social development to an economy. In real estate, they help provide development in infrastructure and uplift the image of the community in which they are developed. In private equity, they help create jobs and improve people's standards of living. Number 4. P2P Lending. P2P lending is a method of debt financing enabling individuals and companies to lend and borrow money through an online platform instead of making use of traditional bank as an intermediary. Because the loans are split into minor parts, many different agents can finance the loan. Since the invention of money, individuals and institutions, lenders, with money have been lending to people and businesses in need of money, borrowers. Peer-to-peer lending represents a convergence between collective financing and informal funding, also known as insider funding, which is financing achieved by mobilizing existing social relationships like friends, family, or professional acquaintances. These are both financing methods with a long history, and an early example of collective financing is the Statue of Liberty's pedestal that was partially funded by an open call. Peer-to-peer investing is an excellent alternative investment. It can be compared to some other traditional investments to see whether it makes sense to invest in peer-to-peer platforms. Peer-to-peer lending is actually also known as crowd lending, which gives you a clear indication there are lots of similarities with crowdfunding. The latter is a way to raise money for a project without having to resort to venture capital. The difference is that with crowdfunding, the end goal is to fund a product and usually receive the product in return, as in platforms like Kickstarter, while with P2P lending, the investors are buying parts of loans with the aim of receiving back principal plus interest, the profit. With crowdfunding of products, we can't really talk about return percentages, although we can have a look at crowdfunding of real estate, in which case you will have a percentage return. When you invest in peer-to-peer lending, it is particularly important to understand the business model of the platform you invest on, as it has a major impact on the risk of face of an investor. This same applies if you are a borrower looking to raise funds for your business or some other purpose. Currently, 4 general business models exist in P2P lending. 1. Traditional P2P lending. 2. P2P lending with loan originators. 3. Bank-funded P2P lending. And 4. Balance sheet lending. Number 3. Royalties. Royalties are payments that buy the right to use someone else's property. Royalties stem from licensing, which is the process of giving or getting permission to have, produce, or use something that someone else has created or owns. In other words, when you keep the ownership of the property and get royalties from someone for use of the property, that is licensing. Licensing your business's intellectual property and getting royalties from these licenses is a common way to increase your business income. How royalties work. Royalty fees and payment amounts can be set in a variety of ways. For example, in a franchise situation, fees can be set as a fixed or variable percentage of gross sales. In many cases, there is a minimum royalty. Some common forms of royalty payments include royalties for specific products like a book or piece of music. A patented product or a concert are generally based on number of units sold. Royalties for oil, gas, and mineral properties may be based on either revenue or on units, such as barrels of oil or tons of coal. A variable percentage is often used for newly created IP. In this case, the royalty percentage might be small in the beginning as sales are low. Then, as the sales increase, the royalty percentage might increase to a maximum amount. Some royalties are paid for public licenses. The Copyright Office collects royalty fees from cable operators retransmitting TV and radio broadcasts, satellite carriers retransmitting network and non-network signals, importers or manufacturers distributing digital audio recording products. In summary, royalties are payments that buy the right to use someone else's property. Licensing agreements outline the details of royalty payments. Royalty payments may cover many different types of property, including patented inventions, the use of artwork, or the mining of resources. Royalties may be reported as business income or expenses. In music, royalties are paid to owners of copyright music. These are called performance royalties. You may pay this royalty if you want to play a song on your radio station or use a song in your movie. Royalties may be paid for the use of images, such as when you want to add stock photography to your website. Another type of royalty is a book royalty, which publishers pay to authors for every book they sell. If someone wants to make use of a patented product, like a new invention, they will have to pay a royalty to the person who used that patent. In franchise businesses, such as 7-Eleven convenience stores, the franchise holder pays franchise royalty to the main company for the use of the name and other assets. Number 2, stock market investing. The stock market refers to public markets that exist for issuing, buying, and selling stocks that trade on stock exchange or over-the-counter stocks. Also known as equities, stocks represent fractional ownership in a company, and the stock market is a place where investors can buy and sell ownership of such inevitable assets. An efficiently functioning stock market is considered critical to economic development, as it gives companies the ability to quickly access capital from the public. Investing is a way to set aside money while you are busy with life and have that money work for you so that you can fully reap the rewards of your labor in the future. If you've never invested in the stock market before, it can be an intimidating process. Stocks are not like savings accounts, money market funds, or certificates of deposit in that their principal value can both rise and fall. If you don't have sufficient knowledge of investing or emotional control, you can lose most or even all of your investment capital. That's why learning the basics of how to invest in stocks is so important. Investing is a means to a happier ending. Legendary investor Warren Buffett defines investing as the process of laying out money to receive more money in the future. The goal of investing is to put your money to work in one or more types of investment vehicles in the hopes of growing your money over time. Let's say that you have $1,000 set aside and you're ready to enter the world of investing, or maybe you only have $10 extra a week and you'd like to get into investing. Before you commit your money, you need to answer the question, what kind of investor am I? Some investors want to take an active hand in managing their money growth, and some prefer to set it and forget about it. Allow you to invest in stocks, bonds, exchange-traded funds, index funds, and mutual funds. If you're on a tight budget, try to invest just 1% of your salary into the retirement plan available to you at work. The truth is, you probably won't even miss a contribution that small. Work-based retirement plans deduct from your contributions from your paycheck before taxes are calculated, which will make the contribution even less painful. Once you're comfortable with the 1% contribution, maybe you can increase it as you get annual raises. You won't likely miss the additional contributions. It is possible to invest if you are just starting out with a small amount of money. It's more complicated than just selecting the right investment, a feat that is difficult enough in itself, and you have to be aware of the restrictions that you face as a new investor. You'll have to do your homework to find the minimum deposit and then compare the commissions to other brokers. Chances are you won't be able to cost effectively buy individual stocks and still be diversified with a small amount of money. You will also need to make a choice on which broker you would like to open an account with. Number 1. Real estate investing. When you think about real estate investing, the first thing that you probably comes to your mind is your home. Of course, real estate investors have lots of other options when it comes to choosing investments, and they're not all physical properties. Buying and owning real estate is an investment strategy that can be both satisfying and lucrative. Unlike stock and bond investors, prospective real estate owners can use leverage to buy a property by paying a portion of the total cost up front, then paying off the balance plus interest over time. While a traditional mortgage generally requires a 20 to 25% down payment, in some cases, a 5% down payment is all it takes to purchase an entire property. This ability to control the asset the moment papers are signed emboldens both real estate flippers and landlords, who can, in turn, take out second mortgages on their homes in order to make down payments on additional properties. When done correctly, real estate is one of the most popular and profitable investments with a lot of potential for success. Real estate investing often manages advantages, and investors can easily steady an income flow that may lead to financial freedom. While you are here, go ahead and click on one of these 2 videos on your screen. See you there.